They would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zada and Mike Armstrong.
That's not Chuck Zada. Guy has way more hair. It's Mike Armstrong, Marc Fandetti, and Ben
Kitchen. If you count
Kitchen.
body hair, yeah.
And Ben Kitchen with you on a Tuesday morning where, I'll tell you what, we started off, futures were all negative today, and I thought we were going to be breaking the 7-day winning streak that we have had in markets so far. But so far in early trading, we reversed itself, so we'll keep you updated on markets so far today. In the meantime, a lot of number of different individual company news out there, and a lot of really household names out there as well. You know, oftentimes we'll kind of get into the weeds on policy changes or, what's going on in the Chinese economy, which we will also talk about today. But we start with a very household name because it had documentaries made out of it and was really a headline for much of the late 2010s, which is WeWork. they're not having to come back. They are, in fact, going into bankruptcy. This had been pretty well forecasted out there. They have been hiring board members that have gone through bankruptcies in the past and actually put out a warning, a few weeks ago, maybe a month ago now, that they may not be able to continue to be a going concern, but officially entering bankruptcy here. And here is the story. They're looking to have over $3 billion of debt restructured. They'll obviously be wiping out the majority of their shares. So if you are an equity share owner, then not great news for you, although it hasn't been great news for you for a while as a WeWork equity share owner. They also have a lot of long-term leases, and we'll talk about how this business model didn't work, but was supposed to work at some point here. But they are also attempting to reject more than 60 leases across North America in order to restructure this company and come out of it the other side with, who knows, they hope a profitable company, but quite possibly a company that will, again, enter bankruptcy. But let's talk about the WeWork model here, because there's nothing exactly like it, but there are many companies that I think fall into the same trap of an eccentric, passionate, and to some inspirational CEO that everyone believes is going to change the world, and get caught into that trap. And I think that's what happened to a lot of people here, both employees of the company who felt like they got taken for a ride, as well as people who invested in the company. But if you're not familiar with the WeWork business model,
well, can we make a point about a charismatic founder who tries
charismatic
to
is the word I was looking
spin the company, a Svengali-like founder, if that's not too arcane or even an incorrect reference, but who's able to sort of charm investors? Look, by the time you and I and everybody else hears about this, the big gains have already been extracted.
Sure.
When Wall Street is trying to pawn something off on you, it's not because they think you're going to get rich. So to me, when we could talk about the specifics and the fact that it wasn't a tech company, but it was valued like one, and that they tried to revolutionize commercial real estate at precisely the worst time probably in the last, I don't know, 3/4 of a century. So some bad timing, some poor management and stuff like that. But as a general proposition, when Wall Street and people who are in financial services are very excited about something, so excited that they're breathless and they're trying to sell it to you, it ain't a good deal. General rule.
99 times out of 100.
Yeah, 99 out of it. That's why I say general rule.
Unfortunately, the exceptions end up being the ones that we all look at, right? Like, you could have said the same
lottery winners
argument
on TV.
Right. You could have said the same argument about Mark Zuckerberg a decade ago going into the Facebook IPO, and I'm sure there were plenty of people saying this is not a business model that's going to make money, and now it's a $1 trillion company. You probably could have said the same about Jeff Bezos and Amazon a long time ago, and the fact of the matter is oftentimes those are the exceptions that prove the rule. And I have further commentary on just what our seemingly very American obsession is with charismatic CEOs, because I don't necessarily see this in other places. But go ahead.
Can I emphasize one point, one important thread to that point I was trying to make, which is some of these companies aren't what they profess to be. I mean, Amazon, and they've expanded, obviously, and morphed and changed.
Sure.
But we knew what they were. Ditto with Facebook. People may not have known what WeWork was.
Yeah. So let's start with what WeWork was, because this was not a new business model. And now I'm forgetting the name of the company that did exactly this for decades before. The parent company is IWG, but they have a local brand here in Regis. Has anybody ever heard of Regis? No? Yes? Maybe?
Yeah,
they
I've
are
heard
a
of Regis.
company that across the country allows small businesses and individuals to rent office space. They've been doing it since the 80s. They would buy or take long-term leases in properties and then lease it back to individuals who have no interest in managing a lease. They did that for years, and then Adam Neumann came in and basically took that business model, but I think the only way to describe it is sexier. We're going to have free beer. We're going to have open spaces. And it's going to be an opportunity for young people specifically to socialize where they work and build a network and focus on all of these other pieces that were charismatic and inspirational and hopeful But ultimately, I think a lot of people lost sight of the fact that you are a subleasing company. That's what they did, right? That's how they actually made money. They also had free beer. They also had happy hours every day. They had a charismatic leader. But that's what they did, is they took out very long-term leases, mainly in metropolitan areas. So they weren't really going to the St. Louis, large metropolitan areas. They weren't going to the St. Louis suburbs. They were going to New York City. They were going to San Francisco. They were going to downtown Boston. And they were taking out some very, very expensive leases. And for a period of time, they never even really broke even on it, but they were growing fast enough that you could actually see, oh yeah, I can see how this could eventually morph into something that might be profitable in the future, albeit, not tech company profitable. But to your point, as the Wall Street Journal here points out, or Bloomberg, points out, for a substantial portion of WeWork's existence, it operated with a stated mission to, quote, elevate the world's consciousness. Sink in. You are an office leasing company whose primary objective is to elevate the world's consciousness. I have no idea what that even means. It sounds like it belongs in some sort of theology textbook, and it was being touted by the leader of this company. And it's just one of those examples. Allbirds is another one that comes to mind, that they touted themselves as some sort of lifestyle technology company, but they made shoes.
Yeah, Tesla could have gone this way too, but as it turns out, Musk understood how to integrate different technology. He was smart in a way that we couldn't have known until he was successful.
Yeah.
But you could say, suppose Tesla had sort of cratered, it would have been very easy in retrospect to have accused him of being a flake and accused us of being dupes. So sometimes you don't know until things play out.
Yep.
And they've played out here, and now we know. So I don't mean to be overly harsh. To me, as a generalist and a long-term investor, it makes an argument for making sure your portfolio of whatever is diversified. Now, WeWork, were they ever even in the S&P 500? I don't think so, because they never... S&P does have profitability and other consistency of performance type requirements.
So let's go through that background here. So this company had been private for years. They were backed by the SoftBank Group, which has backed many other private companies in the past. They attempted to go public in 2019, and that was when things started kind of going haywire. So they were valued at $47 billion in a private valuation back in January of 2019. Later that year, they were attempting to go public, and there were a number of different pieces that who knows exactly where they originated, but were written about the founder. I remember one of them being that he was leasing back the name WeWork to the company WeWork for millions of dollars per year, and just these,
there were warnings,
and these hit pieces, right? Like I remember he was accused of flying on the private jet and with a bunch of people smoking weed and things that Elon Musk does probably every day that were looked at in a negative light.
But 99 out of 100 times, as you said earlier, that is a legitimate red flag. That should concern a shareholder, that a fiduciary and a manager, indeed the dominant force in a company, behaves a little bit irresponsibly, which is why I say Musk is sort of the exception.
Yeah. So in 2019, they ended up pulling that initial public offering. And then we went into what was honestly very unforeseeable. They tried to clean up the company. They fired the CEO. They moved on and started restructuring things. And then the pandemic hit. And guess what? Even today, only half of the total number of people who were going to offices before the pandemic are currently. The company, for some reason, managed to go public via a special purpose acquisition corporation back in 2021. They had to pay the former founder, Adam Neumann, hundreds of millions of dollars to get him to relinquish his shares. And today, as they filed for bankruptcy, this company that was at its peak, valued at over $47 billion, was worth $45 million once you add on the debt and everything else. So I think the main message here is not about WeWork, like Mark alluded to. This is a message and a lesson to me in diversification and not getting too bogged down in the hype. There are lots of exciting, seemingly good ideas. And this is honestly like subleased office space, I still think is one of those good ideas. It was just managed extremely poorly and sold as something as it wasn't.
Companies can make money off this model, just not at that scale.
And not at, the valuations that they were being appraised at. And if you're doing it, you're also probably not elevating the world's consciousness.
It's a great cautionary tale.
In any meaningful way. Let's take a quick break. I'll move on from my WeWork tirade here and on to something else. Another company that has been kind of accused and looped into the same types of things reported earnings yesterday afternoon. We'll discuss Uber's earnings next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is this Saturday, November 11th at Fort Independence at Castle Island. The race is sold out, but you can still help by making a donation right now. So go to dav5k.boston and help support these great American heroes. That's dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
It's supposed to be pretty nice Saturday, too. Kind of excited about this one. Rained last year. I'm excited about this one. Uber. Stock's down about 2% today. Quick details on the earnings. They earned 10 cents per share versus 12 cents that were expected. The revenue came in at $9.29 billion versus $9.5 billion expected. But in either case, they actually did report a profit. And that's
not
only
the first time, right, Mike?
No, but it is the second time. So, it's not entirely new to Uber, but this is the second quarter ever that they have reported a profit as a publicly traded corporation, probably as a private company.
And this, by the way, is why
well.
it's not in the S&P 500. So if you own an S&P 500 index fund, as distinguished from a Russell 1000 in your 401k, S&P imposes profitability and other criteria on what goes in the index. So you may or may not have exposure to a company like this because they haven't been profitable long enough. There's my little 401k investor aside.
You know, we were actually talking about a subject very similar to this yesterday, and Chuck and I both turned to each other and we said, you know who would know the answer to this type of question? It's Marc Fandetti. So one of the questions we had was...
now I have to get it.
Yeah. So the S&P 500 right now has, I think it's 23 companies in it that are smaller than companies in the S&P 400 mid-cap index, because they don't just balance each other out. And our question was, is there an index that actually just tracks market capitalization without requirements around profitability and other
Sure,
such
the Russell
characteristics?
series.
So
That's
the
how Russell
does.
manages its indices.
So Russell just constantly...
Is
what do they
strictly
do?
market cap.
And do they
It's
constantly
the biggest.
reweight that?
It's called Russellmania, twice a year. June and December, they rebalance based on... Used to be called Russellmania. Maybe people don't get as excited about it as I still
That
do.
is actually really funny.
Russellmania. Well, because managers used to front run it. If
Yeah.
you know what's going in or going out, you can, in theory, sell or buy ahead of time, get a little pop, and move out. Russellmania.
So Russell, in
Now,
fact, does it.
now Financial Times Stock Exchange / Russell. They've since changed hands, but... There are a
See?
lot of different index providers. We talk about the S&P a lot, Dow Jones, less relevant, but there's Morgan Stanley Capital International, MSCI.
We talk about S&P because it's on every screen that you'll turn on, right? If you turn on Fox Business right now, what's going to be on there? S&P,
But if you
center.
open your 401k statement, look at what the funds are benchmarked to, what index they use, or what indices they try to replicate if it's a target date or a balanced fund. You might find it interesting as to which use S&P, which use something else, like something proprietary, because S&P wants money to license their index, as do Russell and others. So, get to know your 401k.
There we go. See, we answered a question from yesterday. I appreciate that. But in either case, Uber reporting its second ever profit, and like the stock's down 2% today. I have no real 1.87% now. I have no real commentary on what this means. The stock's done incredibly well this year, as have many similar types of growth companies. The main commentary that I would have on this type of company, because I think it fits in well with WeWork and others, which is there can be companies that have fantastic seeming ideas that really are relevant to you. Uber was one of them. I was a huge Uber user, especially when I lived in Somerville and did not own a car for a period of time. Like, I used them all the time. They were groundbreaking. They fixed a lot of the problems that I saw with the taxi cab industry, where I would have no idea where one's going. Every time I tried to pay with a credit card, they would unplug the machine and tell me that it didn't work. Like, they really fixed a lot of the problems that I faced with. That never happened to you?
No.
Happened all
Was
the
this
time.
really early on? I know they've been around since, what, 09?
Happened all the time.
Okay.
But
Must have been very
yeah, I mean,
early
in
on.
early 2010s when taxi cabs were
You were
just
using
getting
it
used
before
to,
me. Okay.
we're just getting used to offering credit card technology before a lot of them were cash only.
I thought you were talking about your Uber experience. No, I never had that issue with
So
i
I'm talking about a
cab
taxi
company.
cab
I'm sorry,
experience.
never had that
yeah.
issue with a cab, no.
But in either case, these companies that oftentimes fix problems, they sometimes do a really good job of it. Another one that I thought of is Rent the Runway. My wife used that service all the time. It's a dress rental company. I know, just very basic stuff here that, turns out seemingly a very cool idea does not make you into a profitable business. And Uber seems to be bucking that trend. They are a valuable, $100 billion company today. They have been able to navigate this in ways that I think many, didn't really expect. But my point here is that just because a company seems interesting or has a great idea, WeWork is another one. Fast growing, seemingly good idea. Charismatic CEO does not turn it
Mike,
into
it's
a
low
successful
interest rates.
business.
Low interest rates are the beer goggles of the financial world.
Yeah.
Everything looks great, if that's not a chauvinistic metaphor. That's
It
on
is,
the
but
fly,
that's
so
okay.
feel free to dump that, Ben Kitchen. Okay.
I loved
Everything
it.
looks great when
There's
rates
no
are low.
reverse button on here, Mark.
Well, everything looks great when rates are low. Bring it all
Yeah,
on. We're going to find
yeah.
out over the next few years what's viable and what isn't.
When the tide goes out, you find out who's swimming naked. Let's take a quick break. Wall Street
Yeah,
Watch is
right.
next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Susan and Mike from the Armstrong Advisory Group, and this month we're talking about our free guide, the top year-end financial tips. Mike, the holidays are coming, and that brings with it the desire to gift to your family. What are the rules around the annual gifting limits?
Well, you, Susan, owe me a gift every single year, as we know, but I don't think that's what we're actually talking about. What the rules state is that you're able to make gifts in 2023 up to $17,000 without triggering any sort of reporting or paperwork requirements to the IRS. If you go above that $17,000 exemption amount per person, then you do have to file a gift tax return, but it doesn't necessarily mean that there will be any taxes owed. That's where a tax professional really comes into play here to make sure you understand what the ramifications of that are. But gifts to 529 plans, for instance, if you're looking to fund a specific goal, are very common this time of year.
So if someone's thinking about gifting away as a strategy to reduce their taxable estate, Mike, how do they go about that if they want to give away much more than the $17,000? That's the freebie, if you will.
Honestly, more than we can get to in a quick discussion, but you need to talk to a couple of planners here to make sure you understand the tax ramifications and understand the current limits, because states like Massachusetts just completely redid their estate tax, so there's new things to know about that type of strategy.
Folks, we have information about gifting as well as much more in our brand new guide, The Top Year-End Financial Tips. You can get your copy today by calling 800-393-4001. That's 800-393-4001, or request one online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
All right, markets are in positive territory. The Dow Jones is up just over 0.1 of a percentage point. S&P 500 up over 0.25 of a percentage point. And the NASDAQ up over 0.75 of a percentage point. Gym chain Planet Fitness is up 13% after beating expectations on both lines for the third quarter and raising its outlook for the year. Planet Fitness reported 59 cents in earnings per share, excluding items, and $277.6 million in revenue. Analysts surveyed by FactSet anticipated 55 cents in earnings per share on revenue of $268.2 million. TripAdvisor stock is up over 5% after TripAdvisor posted quarterly results that beat analyst expectations. TripAdvisor reported earnings of 52 cents per share on $533 million of revenue versus the 47 cents per share on $505 million of revenue expected by analysts. Shares of Hims & Hers Health is up over 11%. The telehealth company on Monday reported third quarter revenue that topped expectations, while also raising its full-year guidance and announcing a $50 million share repurchase program. And finally, Peloton shares are just barely up about 0.1%. That's shortly after being downgraded by Deutsche Bank to hold from buy. The firm cited lack of clarity in the exercise equipment maker's growth outlook. It also cut its price target on Peloton to $4 from $13 per share, implying about 20% downside from Monday's close. I am Ben Kitchen, and that is Wall Street Watch.
The to my knowledge, the third largest publicly traded company in the world reported earnings yesterday. And nobody's going to guess what it is because it's not a U.S. company. But Saudi Aramco, which has a market capitalization of 8.13 trillion Saudi riyals, which I obviously had to do this conversion, comes to about $2 trillion, $2.2 trillion, would make it the third largest company in the world behind Apple and Microsoft. Unless there's anybody that I'm not considering here, Mark. I don't think there's any Chinese company that comes in bigger than $2 trillion once converted. So I'll let you go to work on that one while you figure that out. But Unsurprisingly, with oil not quite where as high as it had been, Saudi Aramco is, like all the U.S. oil companies, not doing quite as well as anticipated. But nonetheless, you've now had a couple years of oil prices. I'm trying to think the last time. Yeah, we've been above $50 oil now since late 2020, and we haven't dipped below $70 a barrel much in the last 2 years. And so OPEC and Saudi Aramco particularly are doing just fine. The commentary out of them seems to be that they anticipate strong demand in the mid to long term, global demand here. And I honestly don't know really what to make of that statement other than they kind of have to say that.
It struck me as odd. They think that the outlook for fossil fuel use is bright. That's contrary to the direction in which the biggest consumers of oil are, pushing things in policy terms. That struck me as odd, but I'm probably missing something. What also struck me as strange is the market's reaction. Oil's been soft of late. It's down another nearly 3% today, despite Saudi Arabia and other members of OPEC Plus's best efforts to prop up its price. Markets are not cooperating.
Well, as has been the case with interest rates moving down, you can see how that could be an insinuation of growth having already peaked and perhaps recession in the future. And so
we were saying
Saudi
the opposite
Aramco
2 weeks ago. Just so you and I, last time I think I stood here, you and I were faced with rising rates, and we came up with a bunch of very good explanations as to why they might be
growth
rising.
had accelerated.
Right? All these plausible, we and others posited a bunch of very plausible reasons for that. Where are all those now? Out the window in favor of the narrative of the week, whatever that happens to be.
Sure feels good when we have the biggest week in stock market returns in 2023, though, on the back of that. Allows you to change your whole narrative around, right?
Maybe that's it. It makes everybody giddy.
Well, I mean, look, I think when we saw GDP hit nearly 5%, I don't remember exactly when that report was, but at that point in time, it was only a couple of weeks ago, and that is clearly indicative of very strong
third
growth.
Quarter, so that was June to September.
But I think
July
it's
to September,
also very difficult to sit there and say how, or at least how you can paint a picture to say, yeah, the American economy is now going to accelerate from here. And I think that's one consistent piece that I look at is, okay, maybe we're not heading for a recession right away, but it's very difficult for me to see how possibly oil demand keeps up when we have been hitting nearly 5% GDP growth here in the United States. It just seems unlikely to me.
Slowing growth, sure, but still at or above potential, arguably.
Yep.
So I don't see how that should... Again, what do I know? Market's going to do whatever it wants to do. But in my mind, that wouldn't dramatically change a forecast for some of these things like interest rates, a slight slowing, maybe even a dramatic one in GDP. If we slip in a recession, different story.
Very much so. China, lending billions of dollars to countries in financial trouble, many of whom China got them into financial trouble in the first place. So here is what is actually happening with this story. China has been endeavoring on this Belts and Roads initiative for... When was the first time we started hearing about the Belt and Roads initiative?
Maybe
a decade ago?
10 years or so ago.
Yeah, something along those lines. And quite honestly, this is, in a lot of ways, a page out of the American playbook as well, which is lend emerging countries money to develop and see the types of growth that you might want to see there and exert some influence, quite possibly, in those countries
mainly the latter,
as well. So China went out there and did a lot of this, and where was the statistic I was looking at? Yeah, between 2014 and 2017, according to data from Aid Data, China was providing nearly 3 times as much development financing as the United States. So we're
direct,
talking about
the World Bank and the IMF. World Bank provides development financing. IMF is more concerned with currencies and fiscal stuff.
Which are largely backed by the United States.
We started the darn World Bank and the IMF for Pete's sake, something we don't get a lot of credit for. We were thrust into this role after World War II. When the world economy was devastated. We were the only man standing, not just the last. So long history behind the present state of fiscal affairs and money affairs generally internationally.
Since 2017, both Chinese financing has slowed down and the United States has picked up the pace. And by 2021, China was still outspending the United States, but only by about 30%. This article and others I have read are painting a picture of China effectively making bad loans on infrastructure that aren't going to turn out to
There's
what
such a
they
thing as a good one?
meant to be, right? It's
you got to get used to
very
flushing.
tough
If you're going to give aid to developing countries, get used to throwing good money after bad.
Yeah, I mean,
welcome to lending, China, and to global lending.
And we talk about stories like corruption and all of these stories when you talk about different emerging countries. I have no evidence that this is what China was fully aware of. It very well could be that they went into this with the blinders on and didn't really see what was happening. But I would attack it from another perspective, which is, at this stage, China has loaned massive amounts of money to these emerging markets countries. Many of them are very resource-rich, minerals-rich, that could be useful for the next generation of battery technology, for example. And rather than looking at this purely as a oopsie story from the Chinese government of, oh, we screwed up and now we're, struggling on these bad loans, I'll be very interested to see what happens next. Right? What is next in some of these countries? Is it, okay, China is agreeing to wipe out some of these deals, but in exchange, we're getting a military base in your country. We're getting a permanent presence in this country. We are getting first right of refusal on some of the mineral deposits that you have in this country in order to forgive the debt that we are sitting over. Again, no evidence that that's the way that it's going to go, but you can see that being very beneficial to the Chinese economy and exerting the exact type of influence that the United States is trying to counter right now.
Yeah, I guess it's only going to get resolved in one of a few ways. They'll take a haircut. They'll refinance the debt, take a haircut.
Yep.
China will. They'll forgive some of it.
And the question is, in exchange for
I
what?
said three. I think that's just two. I can't think of a third one off the top of my head. There may be a pro quo there. I don't know. They haven't lent on the same terms. The rest of the world lends typically through World Bank, maybe some direct stuff, but I mostly think of the World Bank.
And that is the other piece
for development
that is very different here is China has been intentionally very secretive about the terms of these loans. When IMF and other lenders have tried to dig into, what are the terms and what will China negotiate over, unsurprisingly, they haven't been terribly willing to open the books on those sorts of things. So from the very beginning, this was an interesting endeavor by the Chinese government, and I don't think anybody looked at it as, oh, look at these kind-hearted Chinese Communist Party leaders. They are going out there and developing the rest of the world. It was Chinese government wants to exert its influence. Now is the time where they might have that leverage to do so. So I think the next decade is going to be arguably more interesting than the last one in terms of this initiative that they underwent. Quick break. When we come back, more China talk here on the Financial Exchange.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com armstrongandmarcfandetti.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
I'm going to tell you a story.
So I just painted a picture of organized China attempting to pull off a global influence scheme through debt lending to emerging markets countries and being interested in what happens next in that space. I now want to paint them into the picture of an economy that is very much struggling and cannot seem to get its footing, because both things are possibly true at the same time. And far too often, I think we as Americans take the view of, look at how successful and driven and organized China is. They are undoubtedly going to overtake us at some point.
Some Americans do.
Some Americans do.
I would call them dupes. Like we had Russian dupes in the 20s and 30s.
Yeah. Yeah. Well,
because communism appeared to be working is what I mean. And yeah. Go ahead.
Turned out not so much. The evidence there is in the actual state of the Chinese economy on the ground, which, as we have mentioned before, you will not get good data on what's actually happening there. We reported earlier this year on the Chinese officials' own numbers of youth unemployment. It was low 20s or high teens. Either way, really, really high.
Unsustainably high, yeah.
And what did they do? They just said, this is not something we're going to report on anymore. For obvious reasons. If I could decide what I report and don't report about my own economy and had something like that, I would take it out of the data too. But the fact of the matter is that this economy, from a number of different perspectives, continues to show signs that it has zero traction. We covered a story yesterday where their goal was to focus less on real estate and more on semiconductor manufacturing, and 2 stories today that the Chinese bank and property sector is threatening their slowly growing economy, and also falling pork prices, which I know this is kind of funny to think about in terms of sinking an economy, but pork is such an important product there that it's actually going to contribute to deflation in that economy because they are oversupplied with pork right now. And my main point from yesterday that I'll reiterate today is that de-emphasizing a focus on housing and real estate and refocusing on something like semiconductors does sound like a good plan on the surface. But when you dig in, I see no evidence that it's going to be accomplishable. You have a real estate sector that has been supported by the middle class of China for decades now. And so if you're just going to let that thing swing into free markets, then you are going to be, facing a middle class that is suddenly far, far poorer than they are today. And second of all, I see no evidence that there's any real resounding expertise in semiconductor manufacturing that will allow you to move forward in that space. So the economy on the ground in China remains in very sluggish shape. Perhaps it's already bottomed and we'll see it come out the other end here, but for right now, there are a number of indicators that just show that this economy and society is very much struggling right now. I don't know if you have anything else to add.
Demographically, they're kind of doomed.
Sure.
So keep your focus on the long term, slow population growth, very high levels of investment, but the counterpart to that is low levels of consumption, and ultimately an economy has to transition for high sustained growth. They haven't made that transition successfully. They're becoming more isolated geopolitically, not less. There's a lot of fanfare around all these alliances of dirtbag countries run by unscrupulous authoritarians who never heard of that little thing called the Enlightenment that has driven Western civilization and growth to heights nobody could ever imagine. So maybe they'll open up a textbook at some point and discover that people actually like to be free and they're more productive.
Unlikely.
No, it is. That's my point. They're becoming more insular, backward, illiberal in the classical sense of the word liberal. The virtues that all Western countries take for granted. Like, we're free. We have a free press. You can say what you like for the most part. You can contract with whomever you'd like, providing it's for legal goods and services and that type of thing. These things that we take for granted that have contributed to economic growth here and in other now developed Western countries. It's no accident. China does not, the Chinese leadership, I would argue that they're universal human values, but that's just my chauvinism as a Westerner. But Chinese leadership doesn't value them. They could never see that kind of control. So they're probably doomed economically.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December, according to U.S. News & World Report. December is the start of the dry season on the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visit usvi.com, learn about all 3 islands, and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
I was trying to pull up a list of the most expensive rental cities in the United States. I know that New York is always at the top of that list. San Francisco historically had been towards the top, but Boston was always in the top 5, and I think they might have jumped a few spots most recently, and I'm trying to pull that up still as we go. But in either case, as we are seeing all across the country, the most recent trends in real estate development seems to be further slowdowns in construction. As the same thing you're seeing with single family, the same things are now occurring with multifamily and apartment complexes where permits are way down, construction starts are way down, and I think a lot of it, some of it likely has to do with builder sentiment and just guesses about where the U.S. economy is going, but a lot of this has to do with financing costs as well. The cost to finance a giant construction project, generally speaking, you use debt, and when debt is now, 5% more expensive, 4.5% more expensive than it was just a couple of years ago, these deals are tougher to get done. So in the Boston area, permits to build just 725 units of housing were issued in Greater Boston in the month of September. That's down 43% from the same month a year prior. And since the start of the year, builders have pulled only 8,201 permits. I know that sounds like a lot, but that's a 27% decline from the first 9 months of 2022. This is not great news if you want to see further development, but it is specifically and pretty much explicitly what the Fed is attempting to do when they raise interest rates. It's slow down financing, slow down economic activity to control inflation.
Yeah, it's a consequence of it, sure.
Quick break. We'll be right back with a lot more in the second hour of the Financial Exchange. Stay tuned here.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting your assets away. Todd, what happens if you give your home to your child in an effort to protect it from the nursing home, and later on you decide you want to sell it?
Yeah, that's just one of the problems of giving away your house, but let's explore it. If you give your house to your child thinking, okay, that was easy, but now you don't own it. So now you really have no right to live there and, of course, no right to sell it. Right now, if you happen to have kids that are really nice and you ask their permission, which I don't ever want my clients to have to do, to say, please sell the house, you've also given them a huge tax liability because all the proceeds would go to them. Now, you don't have the money you need to buy your new house. And plus, if they don't live with you, then they don't get this capital gains exclusion that goes around along with selling your primary residence. So you're creating an adverse capital gains tax bill for them to pay. And then in addition to that, if they are nice, after they pay the tax, then they have to give you the money back, which could create a gift tax problem for them and impact their estate planning efforts. Finally, you get the money back, and then you can go ahead and buy another house. Folks, don't go through that. Set up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right, if you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Welcome back to the Financial Exchange. It's Mike Armstrong, Marc Fandetti, and Ben Kitchen with you on a Tuesday where markets just continue to shrug it off. Dow Jones up 0.2%. I was trying to 1/5 or 2/10.
You could have opened any show in the last 23 years with markets just continue to shrug it off today.
Yeah, they do.
It's been one kick in the pants after another for everything else, but markets just continue to shrug it off.
That's right. S&P 500 up 0.33%, and the NASDAQ leading the way up almost a full percentage point. Yield on the 10-year Treasury this morning has been the item that really drives everything recently, down below 4.6% now to 4.86%. What else, if anything, is catching your eye? I guess oil is interesting.
Oil's
too.
the surprise in light of
oil is the big one.
In light of the Saudi Arabia news that we spoke about in the last hour, in light of OPEC Plus, which is the usual group of scoundrels, plus the king of the scoundrels, Russia.
Down $2.50 a barrel to certainly below $80 a barrel, down at $78.30 per barrel, or about 3% today. Part of that is on China data on just what their demand is going to look like. We covered the potential for a recession or just bad Chinese demand outlook there, regardless of what OPEC decides to do on supply cuts. Yeah, the story on oil continues to be, in my mind, good.
I'm glad you brought it up. There's a plausible driver behind the punishing, the pummeling that oil's been taking in the past.
Yeah, China's economy sucks.
Few weeks. Yeah.
It's just
thanks. You told me that earlier before I
second largest consumer of oil in the world.
Thanks,
it doesn't need quite as much of it anymore.
Better late than never.
I kind of skipped over it too until I started reading the headlines as well. So right there with you. And yeah, the big story when it comes to oil in my mind is just, what do we see happen in Israel and potential expansion outside the borders of Israel? And to this point, we're now...
How does that not get more definitively priced in?
We're now a month into this conflict. Wow. Month into the conflict, and it has largely stayed isolated to Israel to this point.
Yeah, just surprising that the market, to use your expression, the oil market specifically, is just shrugging it off.
Seems to be. U.S. debt interest rockets past a cool $1 trillion this year. If you took that payment...
Well, that's annualized, though, for one period.
Yep.
I am an alarmist when it comes to this, but that's over the top alarmist.
So why don't you talk to us about the debt payments and what it actually... I guess start with what they actually are, the size and scale of them in today's economy in terms of the United States deficit, and without being alarmist, realistic concerns about what that might mean for our economy and our societal future.
Well, debt gets to be a problem when it grows faster than the economy. And one rule of thumb is when the interest rate that the government is paying on its debt is higher than the rate of economic growth. And we're arguably there today for the first time, really, I'll say ever, with no prospect of improvement in that relationship. Then debt grows, I'll just say explosively. It gets out of control big and just continues to grow. It becomes as big as the stock of debt now, $26 or so trillion is about the size of the economy. If you look at debt held by the public, it's a little bit bigger than that if you count debt that the Federal Reserve owns. And the danger, Mike, to answer your question and to get at the concern I think we all have is, at what point does it start to retard economic growth? Does debt itself start to become a weight on economic growth and a weight on standards of living? Nobody really knows if there's a magic threshold beyond which the economy suffers because of high levels of debt. What economists all pretty much agree on is that a dollar borrowed by government, assuming it's not invested, an investment could be anything from the government building a road that benefits the economy to winning a war.
Semiconductor plants?
Let's not go down that road quite yet. But yeah, we could talk about that. Some of that might be legit investment. Most of it will probably be wasted if history's any guide. But anyway, at what point does debt become so big that it's more of a drag than it is a tailwind for the economy? And when you get to the point again where you're it costs more to service the debt in terms of rate of interest. Then the economy is growing. When the rate of interest exceeds the rate of economic growth, you're on an unsustainable path if you're also running big deficits, which we are at 5 to 7% of gross domestic product or GDP. That's the fear, Mike.
Yeah, and I would not deign to deny any of that because I think that spending is way out of control. I think the counterpoint to any of that would be that the same arguments were made in the, well, probably not the 90s because we actually
they were
had a
made
budget
throughout the
surplus
80s.
in the 90s, but
They
throughout the
certainly were.
80s, and then acceleratingly in the 2000s, then a whole lot more after 08.
The 80s begot the 90s. We had two deficit reduction deals. We had a pay-go bill passed in the late 80s. We had the Bush Democrat Congress agreement in 1990, which arguably sunk his presidency. He reneged on his read my lips, no new taxes promise and hurt his presidency, arguably. Then we had the 93 deal. So the 90 and the 93 deal put us on a good fiscal. I didn't like the tax increases. I would have preferred spending cuts. But I guess you got to compromise.
Sure.
They did. And it put us on a great fiscal path. And we had, as a result, most researchers think lower interest rates and higher growth than we otherwise would have throughout the 1990s. It was really a golden era because fiscal discipline was imposed twice, in 90 and again in 93. Since we've had the 2001 tax cuts, the 2003 tax cuts, I like the tax cuts part of it. We just didn't cut spending.
Right.
And we went on a spending spree to fund wars overseas and other misadventures.
Right.
So as a result, in the past 23 years, we've gone from a surplus under Clinton and a Republican, it should be emphasized, Congress, to deficits of 5 to 7% of GDP, $1.5 to $2 trillion. As far as the eye can see, the scary thing about the current situation is that nobody's talking about how to remedy it. Two leading presidential candidates. Donald Trump is the self-proclaimed king of debt, doesn't bother him. Joe Biden, similarly oblivious to seemingly to deficits and debt. He pays a little bit of lip service to it once in a while, but no real plan. That's the scary thing about the situation we're in today. It's the debt as a percentage of GDP. Deficit is a percentage of GDP and no prospect, no serious. But where's Phil Graham? Where's, if you're in New Hampshire, Senator Rudman? These people aren't, there is no modern day counterpart to Graham and Rudman and others who were reliable deficit hawks.
Yeah.
None.
Yeah, there's no seriousness about how this gets moderated. And I think trying to paint it even more plainly, I think part of the accelerating potential problem here is if buyers of U.S. debt, because of the size of it, say, or because of the political situation or whatever reason you want to point to here, if the buyers of that U.S. government debt say it doesn't pay enough given the risk, given the fact that the U.S. economy is not growing slowly enough to ever be able to significantly pay it down, given that the politics in the country are not willing to address the growing amount of debt and they're just going to continually finance those debt payments with more debt, then I, as a foreign investor, would say I demand a higher interest rate.
That was one argument for rising rates. Now everybody's done a 180 and is trying to concoct arguments for falling rates in the past 2 weeks. But up till 2 weeks ago, we were all trying to explain the sudden spike in interest rates on longer-term treasuries. And one argument was an increased so-called risk premium, which is where researchers dump the part they don't understand, because long-term rates should be replicable by a series of short-term instruments. And when those two things don't line up, we say, the term premium has gone up. Part of the reason for that might be investor skittishness to hold treasury bonds.
So with this information, I have no idea. I don't think you can really try and guess what this means for the average investor. But if you look at this, the average American for the next 30 years, what potential outcomes can we assume? I mean, one of them to me would be
in a word,
higher taxes, lower spending.
To quote Clubber Lang, Ben, pain. My prediction is pain, not pain and suffering pain, but relative to the golden age of the late 80s, 90s, and I'll even put the 2000s and 2010s. We had a couple serious interruptions in there. But growth was positive on average, interest rates were low, and stocks went up. We're probably looking at a future of higher interest rates, scarcer capital, and more economic uncertainty, periods of high inflation, periods of moderate inflation. Again, there is no prospect. What makes this time different, the question you asked, which I think is the right question at the beginning of this segment, is the size of the deficit relative to GDP, size of the debt relative to GDP, or the size of the economy, and the fact that no politician seems to care. Some do on the far right, to their credit, and in the middle, but there is no coalition of deficit hawks, of fiscal conservatives, or at least people who are fiscally aware that seem likely to get anything done.
Yeah, I have a tough time coming up with a counter argument to much of any of that, and I am.
That's because it was a very well structured argument.
Right,
Mike.
there you go. The only one that I guess I will put out there is we operate in a global economy, right? And buyers of U.S. government debt have options outside of U.S. government debt to look at, and I do not see any relatively attractive alternatives.
So if the bond vigilantes, an expression somebody coined, Ed Yardeni coined it in the very early 1980s, which is a clever way of saying that, hey, bond managers will stop buying U.S. debt if we look like we're a dodgy credit. That will push interest rates up.
Right.
That will enforce discipline. This is why Jim Carville said he wants to come back. When Jim Carville, one of Bill Clinton's campaign managers in the 1992 election, said, if I ever come back, I want to come back after he dies. He's not dead yet.
Reincarnation, got it.
Right as the bond market.
Yeah.
Because it can force fiscal discipline on governments. We're not at that point yet,
We're
which
not.
is scary given the lack of discipline. Imagine when they do decide to become activist.
Let's take a quick break here. When we come back, new debt instruments being used by banks in terms of unloading some of their risk, and then a new entrant into the short-term home rental space. A little bit surprising here. Quick break. We'll be back with that next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most crucial year-end financial tips. As 2023 winds down, there are several opportunities for you to consider that may help you end this year with as little concern as possible about your overall planning. Things like maximizing your charitable giving, offsetting your capital gains, and contributing as much money as you can to your IRA or 401k plan. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hi folks, it's Susan and Mike from the Armstrong Advisory Group to talk with you today about our top year-end planning tips, which are featured in our brand new guide for the month of November. There's a lot of information in this guide, Mike, that we can certainly use throughout the course of the year, but some of the tips that we've included, if you don't implement them before year-end, it's too late. What are those?
Yeah, so a lot of them have to do with retirement accounts. So for instance, if you have a required minimum distribution, that's a 12/31 due date, and most of the custodians actually require you to do it earlier than that, so get on it if you have an RMD. If you're considering a Roth conversion, that also needs to be done by December 31st. You can't do it until your tax filing deadline. And 401k contributions, once again, must be in to your employer-sponsored plan before year-end. You have a little bit more flexibility if you have an IRA, but with some of those things, it's by year-end, not the tax filing deadline. There's also a big one to keep track of this time of year that a lot of people look into, and that has to do with harvesting potential losses. And given the way that markets have fluctuated this year, it very well could be that you have some capital losses in an investment portfolio, and at least looking at those and seeing how they could benefit you from a tax perspective is important. Obviously, caveat, speak with a tax professional or advisor when looking at this type of thing.
Great. Thanks, Mike. Folks, you can request your free copy of this brand new guide by calling 800-393-4001. That's 800-393-4001. You can also request your free copy of our top year-end planning tips guide by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is The Financial Exchange Radio.
The cold weather is coming, and now is the perfect time to get a head start on your next vacation. The U.S. Virgin Islands have been named one of the top Caribbean destinations so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John, and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required and no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com. All right, trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. All right, a little trivia today. A few days ago, the Beatles released their latest and hopefully final single with a little help from AI. The song is called Now and Then and was originally written by John Lennon in 1977, but he never finished it. McCartney and Ringo completed the song and used old guitar riffs from George Harrison to finish it off. So that is the final, hopefully, single of the Beatles' career. The question today is, what was the first single the Beatles released way back in 1962? What was the first single the Beatles released way back in 1962? Be the third person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away the Applebee's gift card on Friday's show. That's 617-362-1385, and the third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Ben and Mark, question for if and when you travel for, let's not talk about business travel because that's pretty obvious, but when you travel for leisure, and presumably you need to rent somewhere to stay, whether it's a hotel or a house for rent, where do you start looking? Like, what's your default option when you're looking for a place to stay? Is it a home to rent or is it a hotel?
I usually start with a hotel.
Okay.
So tied in with Marriott, so I'm usually looking there first.
Okay.
But if there's not a good spot, the second place I go is Airbnb. Yeah.
Mark?
Somebody to mooch off of. I know you.
Never left Massachusetts. Got it.
I wish. Why would you? We've got everything you need here.
Yeah, we do. Yeah. So the Airbnb story has been kind of an interesting development this year. There's been a number of, I think, just kind of interesting turns. The biggest one has been that they've pretty much had to exit New York City. New York passed a few laws, but the major one was that you cannot basically list your entire apartment for rent on Airbnb. You can rent out rooms in your apartment if you so choose, but I believe there's a 30-day minimum requirement there. And so pretty much overnight, New York City outlawed Airbnb in the 5 boroughs of New York. At the same time, I've been hearing a lot of stories about I don't know, blowback against Airbnb and others for just exorbitant fees, and just, how the pendulum seems to have swung towards hotels, again, being a cheaper option compared to Airbnbs, and Airbnb hosts themselves saying that their revenue's down, although Airbnb has put out their own data that contradicts that. In a potential mark of the top for this type of product, private equity giant TPG has started buying single-family homes in Florida vacation markets, where it is renting them out nightly as alternatives to hotels and short-term rentals on Airbnb and such. So the next owner of your Airbnb might not be some individual family trying to make an extra buck, but rather a private equity firm. I don't know if this marks a top for me, or if this just marks a natural progression in what might actually be a profitable business model, Mark. But whenever I think of private equity firms buying real estate in Florida, I tend to think that maybe we're reaching a top of things.
This is not a big commitment of capital by
Certainly
TPG.
not.
And I'd never heard of TPG, so I'm looking at their profile. They dabble in a lot of different stuff. A lot of private equity managers are specialized in a particular part of the market. They'll just buy medium-sized companies. They'll buy like a Pep Boys, make some operational improvements, and then sell it for a higher price. That's the private equity, for the most part, model. So I don't know these guys, or whether or not they could be expected to be any good at this. They're hiring a party to manage it. I wouldn't think, given the private equity business model and who their investors are, that this is ever going to, famous last words, but that I wouldn't think, for what it is worth, that they're never going to represent an appreciable share of the rental real estate market. It's just not, to my knowledge, what they do. Their investments have a shelf life, private equity. They launch a fund, they raise money, they put the money to work, they give back that money over a period of several years, usually not to exceed 10 or 12.
You're looking
with
for
extensions.
Appreciation, not rental income, typically in a private
Typically
equity
spectacular appreciation, greater than you'd get in public stock markets,
Right.
because you're parting with your money, and in theory and in practice, there's much greater risk.
I'm
so
with you that
I don't
this-
see it as catching on for what my 2 cents is worth.
It seems as though it is a capital-intensive type business. It requires a lot of on-the-ground legwork, too. You can't exactly just buy a bunch of homes in Florida and then just leave them to themselves on Airbnb. You need to actually clean them and maintain them and all sorts of things.
Yeah,
So,
and they've outsourced all that. They're not running these
Sure,
things
the private equity
themselves.
firm is not going
so
to go
what do
hire
they
the
bring to the deal, I guess, is my question. They bring capital. They've got dry powder
Cash.
commitments from pension funds and others. But this wouldn't be attractive to me as an investor, due diligencing, as they like to say in the business, which just means vetting, which just means getting to know a manager. If they're just looking to buy something and flip it, do they have any specific operational or marketplace expertise that suggests they'll be able to add value and give me a greater return than, say, if I put my money in the stock market? Doesn't seem that attractive.
I'm with you. Quick break. We'll have the trivia winner when we come back.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today, we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, that's a great question. So many people feel like, oh my gosh, it's an irrevocable trust. I've lost all control. I've given up the ability to do just about anything. You know, you hear that all the time. But you know what? Think about it. If I instead gave my investment portfolio to my children, right, or my rental property to my children, I mean, how much control do I have over that? I got none. I mean, I got to rely on them to pretty much do everything, not to mention the fact that, you know, let's say I gave my rental property away. Technically, I can't sell it. I can't do anything without the children doing it. And what you forget is the children then would be entitled to all the rent. Well, you gave away your rental income. You know, what about if a child gets a divorce and you gave them an investment portfolio to hold on to? Well, that money would all be subject to their divorce or any of their creditors. Plus, it all gets picked up on their income tax return. Folks, you give away assets, you lose all control and create lots of adverse income tax and gift tax consequences. You're way better off setting up an irrevocable trust to protect your assets from the cost of long-term care.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699, or you can request a copy from LegalExchangeShow.com. Once again, 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
What was the first single the Beatles released way back in 1962? Well, that was Love Me Do. Love Me Do is the official debut single by the Beatles. It was on the flip side of P.S. I Love You. When the single was originally released in the UK on October 5th, 1962, it peaked at number 17. I wonder if they'll do anything good in their careers. Our trivia winner today is Steve in Waltham. He has won a Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Applebee's. We'll be giving away the gift card on Friday's show. Trivia is brought to you by Applebee's. Choose from a variety of half-price, late-night appetizers after 9 p.m. Because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
For anyone out there over the age of 65 and on Social Security or getting on Social Security, this next story is for you. In 2023, Social Security payments got a pretty substantial bump and also felt even higher for a couple of reasons. One, Social Security gets an annual cost of living adjustment, and because inflation was off the charts last year, that cost of living adjustment, what was it? It was pushing 9%. In addition, what you saw happen in 2023 was for a number of different reasons, but the large one being the Alzheimer's drug taken off of Medicare. Aduhelm, I want to say, is the name of it. I know that because Chuck made me mispronounce it several times. Was taken off of Medicare, and therefore premiums also went down in 2023. So you had a dual impact here. If you're not familiar, most of the time the traditional way of doing things is you have your Social Security check, and then your Medicare premium is taken directly out of that Social Security payment. And this year, you got a big inflation bump plus a decreased Medicare payment, so those payments went up quite substantially. Next year, 2024, is a bit of a different story. So there is going to be another cost of living adjustment. It's going to be 3.2%. However, the cost of Medicare Part B is increasing, as has been the normal case for pretty much ever. So Medicare premiums in 2023 for most individuals, and when I say most individuals, it's because it's based on income, was $164.90. In 2024, those premiums are going up by $9.80 to $174.70 per individual. And then if you make more income, it's going even further in terms of dollar amounts. And my takeaway from this is, one, you now know exactly what you're going to be getting from Social Security next year, which is nice for planning purposes. But all of this health insurance stuff, whether it's Medicare or maybe if you're on Obamacare or one of those private plans, these are highly income-based plans. And so, like I said, the majority of folks are falling into that $164.90 plan this year. But were you aware that if you went over $194,000 in income, you'd actually be bumping up for each individual per month up to $231 in 2023? And for 2024, it's a different number. It's over $206,000. You're looking at premium payments of nearly $245 per month. I will tell you that this is one of the more in the weeds areas when people are trying to figure out what their income is going to look like. And in my opinion, almost always overlooked by individuals who are making decisions, right? The tough part about this is your income from 2 years ago is what determines your Medicare premiums. And you don't actually know how much income you can have without impacting your Medicare premiums until this time of year rolls around. So just to frame this properly, they just announced very recently how much income you can have in 2022 to not impact your Medicare premiums for 2024. But you had no idea what those numbers were back in 2022. It is a very complex system. And by the way, the complexities that are involved in Medicare are dwarfed by the income requirements for things like government subsidized health insurance from Obamacare if you're maybe self-employed or just buying health insurance off that marketplace. Maybe you're a small business or just a sole proprietor, you might have insurance there. These types of questions can be more punishing than the tax situation. Imagine for a minute you have income that goes over these limits by just $500. You won't pay a lot of extra taxes, but your Medicare premiums will be impacted for a full year on this type of thing. And like I said before, when it comes to selling a home or realizing capital gains or trying to diversify your portfolio or doing a Roth conversion, I see these numbers get overlooked far too often. And so if you have questions about how your income could impact your overall tax and financial picture, we'd love to talk to you here at the Armstrong Advisory Group and help educate you. The number's 800-393-4001. I'm going to give you that number one more time. You can talk to a real life human being at the Armstrong Advisory Group if you have questions about retirement and how your income situation is going to fit into the big picture. Again, that phone number is 800-393-4001, or you can check out a lot of great resources at our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Oh boy, Mark, big banks are coming up with something called synthetic risk transfers as a way for them to meet new capital requirements. First of all, explain how capital requirements work at a very basic level. Actually, I'll go there. Regulators require big banks to have a minimum capital amount of all of the loans that they are making and basically cash on hand or cash equivalents on hand to make sure that if there's some sort of run or financial disaster scenario like 2008, they don't have to bail out the banks again is the premise behind it. Whether or not it'll actually be successful during the next financial crisis is an open question. But apparently big banks are trying to find some, I'm not going to say interesting ways around the capital requirements, but they're doing some interesting things with their balance sheets here.
They are, and it's not new. So to your point, the risky stuff that banks have, just think of a mortgage or something. It'll probably be paid off, but might not be. A more realistic example might be an uncollateralized loan to a person or a business. These are very simple examples, but I think they'll suffice. If you've got stuff like that on your balance sheet as a bank, stuff that could go bad, you've got to hold reserves against it. That makes sense. We call those capital requirements, Mike, like you said. Suppose you could instead insure those risks. That's basically what these synthetic risk transfers are. They sound a lot like credit default swaps. If you remember, one of the culprits of the financial crisis. Now this is different. Yep. These are used to, well, they're almost always used to reduce risk, but these are used to, in theory, reduce risk, providing the party buying the risk you're transferring is able to put money into the vehicle that pays off should the event happen. This is, again, just like insurance. So this enables banks to unload some risk and redeploy capital maybe elsewhere into loans or whatever, expand or whatever it is that they could make a better use of capital doing. So on its face, it doesn't appear to be threatening or reckless, but it is a little reminiscent because these things are synthetic, which just means there's nothing underneath. It's just it's a contract between two parties. Bank says to a big, sophisticated investment manager or a pension fund or the manager or the pension fund through the manager, take this risk off our hands, we'll pay you for it. But if this loan defaults, you're going to pay us so that we're not on the hook for it. So it does presume that the counterparty, and they don't actually use that term, I don't think, in this domain, but I'll use it, can make good on their promise to act as an insurer in the event that something goes bad. So I don't see anything inherently wrong or dangerous for what my 2 cents is worth, but it is interesting.
It is. Quick break here on the Financial Exchange. A lot more when we come back, including Stack Roulette.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Legacy planning is incredibly important if you want to make sure you keep your assets in your family. But if it isn't done properly, you can create significant problems. Gifting assets to your children is admirable, but may not always be the best course of action, especially if there are financial difficulties or a divorce proceeding. Learn how to protect yourself and your family by calling Cushing & Dolan and asking for their brand new guide called Making the Most of Gifting Assets. In it, you'll learn about information related to the gifting process, what tax issues may arise from a major gift like a home or a vacation property, and what happens to the asset if a child has creditor issues. Call 866-848-5699. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, this is Susan Powers from the Armstrong Advisory Group. There are some important financial considerations to keep in mind as the end of the year approaches, so here are some crucial tips for you to think about. Our guide this month is called the Top Year-End Planning Tips, and in it, we'll walk you through key concepts like tax loss harvesting, family gifting, and properly calculating your required minimum distributions. All are important to your overall planning. Call our office today at 800-393-4001 and get your copy of this free guide that may help you finish 2023 with less concern about your financial strategy while setting you up for a positive start in 2024. Call 800-393-4001 and ask for your free guide today, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for an incredible vacation filled with sun, fun, and no need for a passport, look no further than the United States Virgin Islands. St. Croix, St. Thomas, and St. John were voted the #1 vacation destination to visit this December according to U.S. News and World Report. December is the start of the dry season in the islands, so you can expect perfect temperatures, beautiful beaches, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now before Old Man Winter comes calling. Head to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
We'll be hearing from CEO of Disney tomorrow afternoon when they report earnings after the bell. But in the meantime, we can conjecture, we can hypothesize about what their next film is going to do in studios. On November 10th, Marvel is releasing their 33rd film in the Marvel Cinematic Universe, The Marvels. It's the sequel to Captain Marvel in 2019, which was a pretty big success. It made more than $1 billion at the box office. But the signs aren't looking so good for the Marvels. I personally didn't see Captain Marvel. I'll throw that out there. The movie cost about $200 million to produce, and opening weekend is expected to only pull in about $153 million, which is less than half of what Captain Marvel did in its 2019 debut. So we'll see where this goes. It could surprise. Maybe we'll have some really bad weather and everybody will go to the movie theaters over the weekend, but as it looks like right now, Disney continuing to just not be able to reignite the success they had for the entire 2010s decade in the box office.
It's Ben and I were talking about this off the air. It's so hard to top a dramatic, climactic resolution to some long chain of stories.
This is the problem with superhero movies and things like Star Wars and stuff like that is you have all these movies planned out. Marvel did a great job planning out that like second, third phase of those movies, but you have this problem where the audience looks at it and goes, okay, that was the biggest bad guy in the universe. You killed him. who are going to be these little loser bad guys that are now going to make a threat. So the stakes are inherently lowered for all of the next movies. So audiences go, what do I need this for?
I don't know, Ben. According to Bloomberg, the Marvels will feature man-eating kittens with tentacles for tongues.
Oh, my bad. I was way wrong. That sounds way better than Thanos.
What do you have for us, Mark?
So the title of this article is Why the U.S. Won't Change Physical Cash.
We've had questions about this, right? Is the United States
the
dollar
article doesn't
going
answer.
away? It's going to a digital dollar or something along those lines. Does
doesn't
CNBC
look
have
that
the
way.
answer for us?
No, they don't. They don't answer the question in the headline. I read it twice. I'm not that careful a reader when it comes to stack roulette, as you know, Mike.
I did too, Mark. I read it
But
two times.
they don't. But nevertheless, there were some nuggets in here. So first of all, one thing I didn't realize is that the $2 bill is still in circulation technically, although, as you know, nobody accepts it.
One of my biggest mistakes as a
But
parent is going with the $5 bill for our first lost tooth, or the tooth fairy doing that rather than the
Hey, it cost yourself
$2
$3.
God, you have 3 kids, and they all have something like, I don't know, what is it, like 30 teeth or something? I don't know. I'm not a dentist. Go on, Mark.
Are you anti-dentite?
No.
You had some others to pick from, Mike. The 1, the
Yeah.
2, as we just
Still around.
discussed, and this might be out of your league. There's, of course, the 10 still in circulation, the 20, the 50,
Yeah,
and the
definitely.
100. But the 500, the 1,000, I couldn't tell you who's on it, or nor the 5,000, nor the 10,000.
Those
though
are
I
actually
wanna say-
bills that are circulated.
No, they
Oh.
used to be. They've been withdrawn.
Done away with them.
$1 bill. Some other fun facts in this piece. I thought the $1 bill used to be the most widely circulated, but now it's the $100 bill, which many speculate could be used for illegal transactions domestically and as a store of wealth overseas. Obviously, if you're just stockpiling dollars because your own currency is dodgy, you're going to want to do it in the biggest possible denominations. The final tidbit that I've anyway found interesting was that we spent almost $1 billion printing bills last year.
That seems like a
So
dumb
there's a
idea.
money-saving argument for it, but we're still using the flimsy fabric. These things wear out in under a year.
Apparently
other
our
countries-
dollar technology, like our actual physical dollar technology and what we
We
use
don't
it,
use the most durable
is
thing available.
pretty far behind.
Other countries weave weak plastics.
Yeah.
The article says polymers, but I think anything could be a polymer. But anyway, I don't know. I'm not a chemist, but other countries.
I'm not a dentist.
weave-
Mark's not a chemist.
Yeah, shocker. Other countries are weaving materials into these things to make them more durable, which you think would pay for itself, but we haven't incorporated yet. It's not even obvious that we're discussing it. So currency's not going to change in the short term, I guess, is the upshot here, everybody.
On a similar but related topic, there have been a lot of these, in my mind, mainly emanating from conspiracy theory circles about the death of the dollar and how the Federal Reserve or the Treasury Department is going to implement a digital-only dollar and you won't be able to pay cash for transactions anymore. I feel like I've heard a little bit less of that more recently, but maybe I just haven't been getting out there enough, because I do want to reiterate there that there is just no evidence of that right now.
I'm still not clear on what the normally I'm paranoid about government overstepping its bounds, but in this case it's not clear to me what the concern is. Government can tax transactions either way. If you're looking to keep your black market stuff under the table, I get that. You want to pay your landscaper in cash or give a gift in cash to whatever, and you don't necessarily want the feds knowing about it. That I get, but there are probably going to be ways to transfer digitally anonymously too.
I think it's that plus the concern of maybe this government today doesn't want to, doesn't want to go after something that I deem important to me that is legal. But what if in the future a government says, guns across the country are outlawed and they have a Supreme Court that stacks up in their direction and now can track every transaction with a digital dollar rather than a physical dollar would be, I think one of the real concerns that I would have is just a lack of financial
it's certainly easier
freedom
to
from
impose
cash.
It's like the Stamp Act, which you recall the colonists didn't like. You had to buy a stamp for certain documents had to be stamped. That was a tax. I guess the sensitivity is sort of the same. If everything's digital, it's trackable and it can be taxed. Things you do today, again, under the table or just on a friendly basis. You give a graduation gift to somebody. Is that technically, I guess, is there a de minimis exception to gifts? Like if I give somebody, I'm a cheapskate, so if I give somebody $50 for a graduation gift, that's not technically a taxable gift, is it?
No, because anything under
there is a de minimis.
17,000.
No. But I mean, if you add all those together,
it's per person, per individual receipt.
Okay, thank you for clarifying that. So you're okay with de minimis stuff.
Yeah.
So government can't tax that under the law anyway.
Yeah.
So the real concern should be, keeping the law's hands off of out of different areas as opposed to worrying about what medium we use to transact in and whether or not that can be taxed.
There's also been this mass confusion in my mind about how if the Treasury Department eventually rolls out a digital dollar, which, hypothetically, again, they could do as a competitor or just, as another form of currency where I'm transacting on a digital dollar, that would have something to do with cryptocurrency. And the answer is no.
That's an answer to the problem that crypto poses.
Right.
You want the Feds backing it.
It would be completely separate, and the Federal Reserve nor the Treasury Department, in my opinion, has any interest in saying, hey, I know dollars are pretty good and have formed our country, but we're going to switch to Bitcoin instead. That doesn't sound like
Let me just say, I agree
happen.
completely with people you unkindly call conspiracy theorists with respect to digital currency. I know you're just kidding around. But, what if my battery dies? I mean, there might be an argument for hard currency.
I agree.
We've all lost power for a week. At least I do routinely in Rentham, where we have third world power infrastructure. My area, anyway. So I don't want to give up hard currency completely.
Markets are open and remain in positive territory. The NASDAQ up 120 points or 0.9%. The S&P up about 13 points or 0.33%. And the Dow still up about 65 points or 0.1% as we close out the show today. We'll have a lot more for you tomorrow, so tune in and have a great afternoon, everybody.